That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm
Ladies.
not fucking leaving.
Gentlemen,
Today. Look at this thing.
we are here.
Welcome to the fucking show.
It is good old Mateus Mullah and the real Cash Patel.
Oh, please.
Cash Flow Chronicles? No? Okay.
This was one of those days, bro. One of those days.
Tell us about it. What are you feeling?
UNH. Bro, I cannot tell you the gut punch that this industry took today. I mean, every health insurer got smacked. I mean, there were some that didn't get smacked nearly as much. As I just posted on Twitter, like, you know, like who had exposure to the Medicare Advantage thing. But dude, this is where, like, this administration, if you know what's going to happen, bro, you could make so much money, you know? Like this guy, one of the senators or I think House reps or whatever, he's on some kind of committee. This dude sold UNH at a really good price, and then this thing collapses. And it's like, bro, there's just way too much, what is it called? Way too much like coincidence, you know?
I don't even know really what actually happened. I mean, I know that they signed a bunch of things, which I think is pretty interesting. So, this serious question, because I don't know the answer. Does this mean no government shutdown? Everything's good?
No. So they don't even have to deal with government shutdown at all.
Completely different. Completely separate.
Completely different. Okay. Government shutdown. The second one is supposed to be because like the ICE agent shot that dude in Minneapolis, and so now like the Democrats are asking to defund ICE because they're supposedly, you know, the Gestapo or something. So that's basically the thing. And so unfortunately, I don't want to go too much into politics, but this is just how the cookie crumbles, you know, like one policy comes in that lets a whole bunch of people into the country illegally. Another policy comes through to try to correct that. And each side is going to harp on the other side's negative. And right now, this incident has basically created a rallying cry for the pushback against ICE. And even people who were, I would say, moderate on the issue have kind of like started to lean a little bit towards, hey, I think the ICE is doing too much, you know, like, so I don't know where all of this is going to end up politically, but it's one of those things that seeing the Trump administration pull back, I think the director of ICE or something from Minneapolis. I just think it's definitely I don't know, man, this day and age, the politics is really driving almost every issue in the country. Like, I don't think I was ever this in tune with policy in my life. Like, I don't remember being this in tune during the Biden admin. Do you?
I know my dad was really into it. I was in college mostly, so I guess directly for a few years outside of college. But I mean, it always had a facet within my career to an extent because I work in oil and gas, and so it's generally always a heated topic depending on, do we lean more green, do we lean more into CO2 emissions, that sort of thing. So it's always been a part of it. But you're right, I think other than outside of oil and gas and energy, it's definitely bled more into what goes on a day-to-day than I'm used to, I would say. Yeah. But I felt like it was kind of like that with Trump 1.0 as well.
Yeah. See, one of the things that's dumb is like the comment right there, you voted for this, Chris. No one voted for this. That's dumb. Like, I didn't vote for like people to go into different communities and start shooting people. That's just dumb. Like, and I think that's such a really, like, I don't know how to say it. It's such a like very like, I don't know. I don't even know the term of it, but it's an uneducated way of looking at things, you know, because you can't really tell everything that's going to happen. You know, you think that, you know what, the positions that the person is going to come up with are going to be somewhat moderate if they go on the extreme side. what are you going to do? Like I would say like it's the same thing with Biden. There's a ton of people that voted for Biden during Trump, the first election. Who would have thought that those, the Biden would have just let the floodgates open with all the illegals coming in, right? A lot of those people were probably regretting their decision. So it's just how the pendulum swings. Sometimes I wish we would get someone with more common sense that was balanced. But then again, this is just where we are in the current political atmosphere. So it is what it is. It's something that we just have to kind of work around and call it out when we see that it's wrong. Like I called out the Trump administration when I thought the tariff idea is dumb. I think right now all these other countries are lining themselves up with other countries, and they're cutting the U.S. out of the system, and that's why you're seeing the dollar. The dollar since President Trump has come into power has gone from 108 to like 95 right now on the Dixie. So it just weakens the US dollar, and that's keeping rates higher. Because if you have a currency that's devaluing, you're going to want higher longer term interest rates before you buy US treasuries, because you're going to say, well, look, if I'm buying a currency that's appreciating, I can accept a lower yield, right? Especially if you're an outside investor, if you're in a different country, if you're buying the US dollar and it's a strong currency, then you feel like, hey, you're getting a real return on a currency adjusted basis. But at the same time, if the dollar is weakening, now you're going to say, hey, listen, I don't want 4%, I want 5, or even 6, just to make sure that I'm getting compensated that I'm taking by investing in the US Treasury. So like I said, like on one hand, you've got sort of like this weird dynamic where everyone is choosing different economic models right now. I don't like this trade deal that India did with the EU. I don't like it. I'm not a big fan of it. Not because I'm not loyal to my Indian people. I think it's great for India. It's great for Europe. But at the end of the day, to me, it shows that now their people are willing to kind of bypass the US's main area of basically the US markets and say, you know what, we don't necessarily need the US to kind of rubber stamp a lot of the stuff that we're doing. We can make unilateral deals. Same thing with the Canadians and the Chinese. That's a whole different thing. So like I said, I feel like the US is getting sidelined, and I'm not a fan of that.
Mm-hmm. No, I think that the past, it wasn't even really since Trump 2.0. I think even before this, I remember having the conversation of deglobalization many a times with you. And I think that that's just a continuation of what we're seeing, whether that's exacerbated by Trump 2.0, possibly, because I think people are starting to understand that Trump is about his own interests, about, what's best for the United States. And so he's acting a lot on that. And so I think a lot of people are starting to see that and say, you know what? And yeah, maybe we should start to do that for our own countries and hyper focus on where we think the best opportunity is. But I just hope that in that they don't realize or forego and discredit who their long-term allies are, right? Because and this kind of goes back to what we've seen in the past, which is like Palantir is a prime example of this, of making sure that regardless, they'll grow at all costs, or try to at least, and deal with different governments, as long as they still align with the United States government and NATO in that respect. Like, as long as it makes sure that the West is kind of secure. So dealing these deals with people that may or may not be as, I guess, Western focused, like with India, who's always kind of played neutral, but has always kind of sided with the BRICS nations. And then dealing with China, I think, is always something that is potentially boggy territory. And I just don't want to see people caught off guard by what that potentially might mean in the long run, which, who knows? I mean, maybe I'm being super, what's the word I'm looking for? Blinded by my Western sort of upbringing and what I believe is the right way to kind of do things. But I don't know. I would just hate that people start making these deals just for financial reasons or to spite the United States, when in reality, we still are allies to a lot of Europe, regardless of whether or not they continue to litigate against our tech companies, and then I always get people hating on me for that, being like, Europe doesn't hate America and blah blah blah. It's like, well, maybe not you as individual citizens, but it seems like the leaders of Europe have definitely turned their backs on the United States for what they basically said. And I remember I said some stuff in Amit's Market Open this morning, and people were calling me out, being like, "You're an idiot. You have no idea what you're talking about." But if people just looked at the World Economic Forum last week, really, other than the German chancellor and a few others, majority of Europe was talking about their own self-interest, and same thing with Carney, their own self-interest, which I get and I understand, but that doesn't mean to turn your back on a specific nation, right? And I think that that's the difference between what I'm seeing with the United States and Europe relationship versus the United States relationship is the United States says, okay, we're still going to mind our own self-interest, but we'll still be here if you need us, versus it seems like what Europe is trying to say almost to an extent is we don't need the United States at all, which I think is very, very funny. But anyway,
No, but
people might say that I'm being like super MAGA or something like that because they always do, but I don't think I'm stating anything that's political at all. I think that's strictly the facts that I heard from World Economic Forum last week.
Yeah, I think this whole thing with people distill opinions down to whether it's MAGA or not. Like for me, some of the policies with the Trump administration I agree with. Does that make me MAGA? No. Some of the things I disagree with. Does that make me like a left-hard, like a Kamala supporter? No. Like it's just, you have to be nuanced. There's things that you're gonna like politically, in one way, and there's things that you're not gonna like in one way. And sometimes you're wrong, and you have to admit to it, and sometimes you're right, and you have to admit to that too. So I don't know. For me, when I look at these trade deals and everything else, like I said, I just feel like the U.S. is being sidelined, and like I said, I just don't like seeing that. I'm an American first. I get ridiculed by my cousins all the time. They're always like, oh, if India and the U.S. went to war, who would you support? And I always say the same exact thing. I'd fight for America. That's my adopted country. Like that's who fed me. That's who clothed me. Yeah. Like I'm part of the U.S. Army. It's funny because like whenever if someone says like, oh, you're in the Army, like the Indian Army, and I'm like, no, the U.S. Army, and they're like, huh? But you don't fit the typical U.S. Like Indian arm like looking guy, and I'm like, hey, listen, welcome to the world, man. So, I mean, like I said, I love my brothers and sisters in India, quote unquote, because everyone in India is a brother and sister. But at the same time, yeah, this is the country that fed me, clothed me, gave me opportunity. So this is the country I'm gonna die for and defend if we ever get an exchange. Thank God that India and the US are both democracies, and they're very stable democracies for the most part, and the likelihood of them ever having a kinetic conflict is very, very low. But if there was a possibility, like I said, and I had to choose a side, I'm sorry guys, I'm choosing America. And here's the thing, I'm a US citizen. That's part of the process you go through. You're signing up for sovereignty to this country. You can't just say, I want this country's benefits, but I don't want to take on the risks of this country, right? And so even though some of the stuff that I don't like that President Trump is doing, and it goes against India sometimes, I'm always an advocate for whatever is the best for the United States, and hopefully our allies, but I'm going to always push for whatever's best for the U.S. And I think right now, when I see the dollar being sidelined around the world, people like choosing alternatives, and I'm not a fan of that. I think we have a certain level of privilege by being the world's reserve currency, and by dismantling that world order, we're setting ourselves up for a tougher future in the future, because we will have to effectively compete with other people. Like by waking the Europeans up, on one hand, it's good to see that the Europeans are going to kind of step up a little bit, but at the same time, they're one of our largest customers of defense equipment, So to lose, like, let's say the F-35, almost every European country uses the F-35 because it's a NATO standard, right? Now, a lot of these other countries, they've been, you know what, we don't want the F-35 anymore. Maybe we want to support the Gripen, from Sweden, or we want to do the Rafale from France. We'll develop, we'll go that route. And it's one of those things that just makes the U.S. have to compete harder in other markets, and I think in the long term, the U.S., to be honest, can always outcompete anyone. I believe in this country. I believe in its people. There's a ton of reasons why this country is uniquely positioned to, to do well in the future. Do we have times where we slip up? Absolutely. No country has this point where everything is just straight and up into the head, up into the right. There are periods of time where shit happens, and we'll deal with it because that's who we are as Americans. We're not scared of adversity. That's the one thing I'll tell you about a U.S. citizen, like a person from the U.S. versus people from other countries. Other countries, people tend to be like, oh, look, it's a problem. Can someone come and solve it for me? Blah, blah, blah. Usually the government. Here in the U.S., when we have a problem, especially if it's a major problem, we do what we have to get past it. So, yep. All right. UNH. Let's talk about UNH. UNH is important to talk about today.
Lead us to the promised land, because I literally know nothing.
Okay, I'm gonna take my Captain America hat off for 2 seconds and put on my Captain, or should I say my I don't even know, man. But UNH got smacked today. So did a lot of the other health insurers. The primary reason for the downward move, even before the drawdown from the earnings report, was because CMS, which is the Center of Medicaid and Medicare Services. I think that's Medicare and Medicaid Services. Pretty sure it is. All right, whatever. But they control Medicare and Medicaid. They came out and said, we don't think that you guys deserve to get a higher reimbursement rate in 2027. We think you guys should only get 0.09% of an increase. They said that right now the amount of money that you guys are getting is perfectly fine. And we're not. And they also changed some of the things around how coding is done on the chart review process. So it's detrimental to companies like UnitedHealth, who are saying, look, people are getting older. We're going to have to basically pay all these insurance claims. And at the same time, the hospital systems are asking for more money to cover all these patients. We are getting hit by all sides. Our margins are going down, and we can't sustain the current environment with the current rates that we have. We are looking for at least 5 to 6% in increase. So the proposal was 0.09%, which literally, if 0.09% ends up being the final amount, then that could theoretically destroy a lot of the UNH and Humana, especially, and CVS Caremark, because those are the three main Medicare Advantage companies. It could destroy their margins, and it could impact their earnings significantly for the next at least 2 to 3 years while this thing, gets worked out and in the future. And so one of the unfortunate realities is that the insurance companies, they have mechanisms in place that are very draconian that they don't want to implement to protect their margins. But if they have to, they'll do it. UnitedHealthcare has already kind of started doing a lot of that stuff. One of the things that they've been doing is narrowing their networks. Have you ever heard of that concept, narrowing their networks?
Yeah.
So imagine right now you live in a city, you're a patient who has Medicare Advantage through UnitedHealthcare. You're able to go to all of these hospitals, blah, blah, blah. But what if, Baylor says, hey, listen, if you don't give us 10% higher reimbursements, we will not take your patients anymore. So UnitedHealthcare has a choice. They can say, listen, Baylor, we're going to cut you off and send all of our members only to Houston General. I don't know if there's another hospital, but Houston General Hospital. And so now Baylor is going to have to rethink themselves and say, wait a second, I can't raise my prices 10%, because if I raise my prices 10%, then I'm going to lose a lot of business. I'm going to lose a lot of these patients. So by doing that, UnitedHealthcare can leverage the situation where members are going to be limited on which hospitals they can go to, but it's also more profitable for the insurance companies because they have then negotiating power with the hospitals in a particular region. So let me just bring up, let me just share my screen and bring up a few examples of this. So right here is, and this is kind of littered all over the news right now. So if you just type in this, you can see right here, like deadlines passed, United Healthcare Medicare Advantage patients lose in-network coverage at LVHN Hospital, right? So that is Lehigh Valley Hospital. That's in Pennsylvania. So if you have Medicare Advantage in Pennsylvania, United Healthcare has basically said, hey, listen, Lehigh, we're only going to pay X amount of dollars for X amount of reimbursements. And Lehigh Valley is saying, no, we are not going to accept that. We want more money. So what is UNH going to do? They're going to end the contract, and they're going to basically direct all the people that are in their Medicare Advantage program to the hospital that's preferred, that's in network. Now, of course, you can go to Lehigh Valley, even if you have Medicare Advantage with United Healthcare, but you're going to be something called out of network. And usually out of network, you have a lot more cost that you have to pay out of pocket than if you were going to in-network. So like if you go to an in-network hospital, maybe your deductible, I mean, your copay is lower, there's certain services that you don't need a referral for, blah, 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 all that good stuff. Versus if you go to something that's out of network, you can still go there, but it's going to be a lot more difficult, both from a efficiency standpoint for you as a patient and also from a cost perspective. So this way, the hospital systems that are in Pennsylvania that do support United Healthcare Medicare Advantage, they can basically get more market share. And if they get more market share, that's more revenue dollars coming their way and so on and so forth. So one of the challenges that you're running into right now with United Healthcare is that they are in, and it's not just United Healthcare. Every one of the Medicare Advantage insurers are in the same process of negotiating for better rates from the hospitals that they service. Now, the hospitals that service all of these Medicare Advantage patients, they're sort of in a limbo as well, because they are dealing with a lot of uncompensated care patients. So right now, if you have like ACA and all this other stuff, these people have health insurance, but let's say a lot of people don't have health insurance, or they're illegals, or people that just can't pay for whatever reason. If they go to the hospital system and they get taken care of there, they're not paying anything. If they're not paying anything, the hospital still needs to make money. So what they tend to do is say to the commercial providers, like to insurance companies, you're going to basically subsidize our cost to take care of the person who doesn't have insurance, right? So let's say someone comes into the hospital, they need $100,000 worth of surgery and services and everything else, and they don't have insurance. The hospital doesn't just basically say, sorry, we're going out of business. What they essentially do is the people who do have health insurance, they go to the insurance company and says, you have to pay more, right? So one of the challenges that we're running into for a lot of healthcare systems is that if, let's say, Obamacare subsidies, go away, on one hand, there are going to be people that don't have health insurance. And if they go to these hospitals and, of course, the hospital is going to take care of them, they're going to end up feeding into the whole cycle of higher commercial pay. So the money is always going to be moving around. Now, there's also other parts to this whole equation that comes around too with the amount of services. So if you look at medical services CPI, so if you look at this, so this is the medical care. Let me just do on a year-over-year basis. There you go. Okay, so let's do last 10 years. Actually, let's do last 5. So you can see here CPI on medical services at some points actually has gone down. And in September 2023, it went down. But since then, it's around 3.8, and it's kind of like holding steady around these prices, right? Now, these insurance companies, they're demanding 5, 6, 7% increases in reimbursements. Now, I was curious. I was like, what the hell, man? Like, in CPI on the medical care side is not growing nearly as much. So why the hell are these insurance companies asking for such a large raise in reimbursements? Well, the reason why, and I spoke to one of my friends about this, like the reason why is because if you think about it, on a per visit basis, things can be 3% higher. But if the person goes more times, right? That means that now the cost is going to be more. So let's say you, Matt, you go to the hospital one time, you get treated, you're going to pay a certain amount of money, right? But let's say you go to the same hospital 5 times and you get treated for the same exact thing. Now, all of a sudden, the cost is 5 times more, even though technically for that one service, the price hasn't gone up like crazy. The number of people going and getting services is going up tremendously. So there's this push towards more service, more people utilizing care more. So before they were getting coverage, but at the same time, they were not utilizing that care nearly as much. Now people are going to the hospital and getting taken care of a lot more frequently. And because of that increase in frequency, the utilization rate has gone up significantly. And I think that's a normal trend. I think eventually it dies down because post-COVID, a lot of people now, they were putting off a lot of things that they should have been getting taken care of for like 3 years. Hospitals are open, COVID is over. Now people are going and getting all of the stuff that was done. So that's where we are in this whole mix of things. And now the insurance companies and the federal government are kind of putting roadblocks in to try to mitigate people from limiting the amount of times they utilize the care. I'll stop for some questions, because if you want to ask some questions, then we can kind of go into the next thing.
Well, I'm kind of curious. I mean, you stated something that's obviously in the back of my mind, which is like if somebody just doesn't pay, they can just pretty much, for the hospitals to make sure that they're still running, basically not charge extra, but like eventually you're going to see an inflation in the people that actually are paying costs because they have to make up the money and still, keep coverage going for everybody else. So I guess my question is, with this whole piece around specifically what the big debate has been about, which is, healthcare for anybody and everybody. Do you think that part of the reason why healthcare costs have gone up over the past several years has been due to the fact that you do have people that aren't obligated necessarily to pay it back, and therefore that costs are being put onto the normal insurance companies and or the people that are paying, like you or myself, who would likely pay? And do you think that then if potentially some of those people leave the country or stop going as much, that potentially you could claw back some of the medical costs?
So there's sort of this cost. There's a couple of like nuances that we have here. Number one, a lot of these people, they, even though they come from outside and, sometimes they can go to the ER and it ends up being uncompensated care, they don't utilize services nearly at the same rate. But at the same time, a lot of them work within the industry in supporting roles that basically limit cost inflation. So as an example, there's a lot of people like at my hospital, all the cleaning staff, you could tell they were all immigrants. Okay, they were basically hired by this private company, right? So the hospital system contracted with this private company, and the private company hired all of them. If the hospital system had to hire all of those people and pay them American wages, the cost to the hospital would be way more, right? So one of the challenges that you see with a lot of these immigrants also is that, yes, they're here illegally, but they do pay taxes in other forms. And a lot of those taxes, especially in something like payroll, those taxes end up going towards Medicare. And the thing is, a lot of these people never get to the level where they actually even utilize Medicare, right? So it's such a weird dynamic that we have, where on one hand, you've got the inflationary pressure from basically an aging population, because now the US, we're getting to that point where the population has aged significantly. And if you just look at the trend, where is this? Damn it. Let me see if I can find a good chart. It's hard to find a good chart right now, but basically the demographics here in the US, you're seeing that most of the population here in the US is getting to that age where there needs to be a lot more care for people, right? Like the average age in the US has gone up significantly. So if you're deporting young, healthy workers who are contributing into the system, but at the same time, your average age of the population is getting older, if you start to take out the bottom, you're basically not funding the people at the top. And that's going to cause a problem because now you have a deficiency, so it's just such a weird dynamic where, yes, there's probably some uncompensated care that goes into the system because of the illegals, basically not necessarily paying full out of pocket costs. But at the same time, they also kind of help mitigate some of the cost inflation also. Now, this is the weird part about healthcare in that when I was younger, everyone here knows probably that I used to work in radiology. And one of the things is that back in the day when you did an x-ray, you took, let's say, a chest x-ray. You had to take the film, you had to put it into a processor, you would get the image, you would send it to PACS, or back then you would actually have film and do all that stuff. And so to get one x-ray done, the cost was probably significant compared to what we do today. Today, if you need an x-ray, you just go in, hey, I have an x-ray, the order is in the system, you press the button, boom, 2 seconds, take a deep breath and hold it, x-ray done, right? Like super quick. The reading right now, radiologists, back in the day, you actually had to sit there and do all the stuff. You had to get someone to retrieve old films. Now everything is automated, everything. So you would think that, hey, look, the cost of getting an x-ray went down significantly. So that should be like a deflation. That should put deflationary pressure on the healthcare system, right? Just based on what I just said, right? Like if before it took 10 minutes to do a study, now it only takes 30 seconds. The cost is going to be lower, right? The problem is now people don't even, like the ER docs, they don't even care anymore. They're just like, they order x-rays like it's candy. They're like, just, go to x-ray, get a, like if you come in with like, let's say a sprained wrist, they might do a hand, a wrist, a forearm, elbow x-ray, maybe a shoulder. And just for good measure, they'll do a chest x-ray because they know it's so easy. So the number of cases actually has gone up significantly. So, so when you have this situation where you push costs down, the problem is people always kind of push the services up because they're like, oh, it's such an easy process. So now instead of just the doctor saying it's a sprained wrist, let me just do a wrist x-ray. Now they say, well, let me get this entire goddamn hand, and a lot of times they don't want to get sued because let's say they have a fracture that's a little bit above, let's say right now you have the ulnar and the radius, you could have an ulnar and radius fracture right here. But let's say they suspect that it could be also an elbow. Back in the day, they would use their judgment and try to limit, the amount of exposure. But now it's just get everything, just be precautious, and that's where we are in the healthcare system. So there are so many like nuances to the healthcare system and it's so complicated. The only thing that we can do and insurance companies can do is just put roadblocks to try to mitigate some of that spend, right? And so the way they do it is by utilizing things like deductibles, co-pays, prior authorizations. And the challenge that you run into is that they're ultimately the guys who get blamed, right? They're the bad guys. Like they're the ones that are the gatekeepers between you and getting taken care of. At least that's what the perception is. Most of the time, what they're essentially doing is they're doing the bidding of the company who's paying for that insurance. So like right now, the company that you work for, they pay for your health insurance, right? And because they pay for it, they're ultimately the ones that are going to get charged based on whatever happens to you. So you, Matt, if you go in and, you have a problem with your health, you're going to basically insurance will pay for it, whatever. But what they're going to do is send a bill to the company that you work for later and say, hey, listen, Matt had this, and this. You're going to have to pay us X amount of dollars. So now your company is going to be like, oh, crap. Like, should I even cover Matt anymore? So there's so many nuances to it. Then, of course, there's going to be debates in the future about let's say your mom's 89 years old and she has a hip fracture, right? Should she be able to get a hip replacement that costs $100,000? And she's got 4 different comorbidities. And she's probably got maybe a year and a half, 2 years worth of life left. Should she get a $100,000 procedure?
It's tough.
You know, the problem is morally, yeah, if it's my mom, of course I'm going to say, hell yeah, she should get that hip replacement. Like she should enjoy the year and a half that she has left. But that also means that everyone, you know, because she would be on Medicare, guess what? That pushes costs higher to everybody, right? And the challenge that you run into with this debate is that while everything is good economically, we can all say, yeah, everyone should get free healthcare, everyone should do this, everyone should do that. The problem is usually when the economics stop making sense. And one of the challenges that we're running into in this country, and it's one of those silent problems that's going to creep up, is the Medicare trust fund is starting to dwindle down. And at some point, we're going to get to a level where care is going to have to start being rationed. And you don't want to be in that position where you get care that's rationed, right? So does that mean that we sacrifice grandma's 89-year-old's hips to try to preserve, you know, health care for the rest of us? Or do we just say, you know what, it's okay, let it, you know, just go ahead, keep spending the money?
It is tough. And I get it because, I mean, I hear so many people that are so thankful for Medicare because otherwise with normal Cobra and stuff like that, they probably wouldn't be able to afford any sort of insurance. And, but I know there's Medicare, then there's Medicare Advantage. So, I mean, I know that there's different levels to it as well. But, yeah, I mean, my mom was in the hospital, you know, 2 years ago, and we didn't see a bill at all, you know, because of Medicare. So it's interesting how some of that stuff kind of works. So it's tough. It's tough.
You know, I know this is going to sound, like I said, I don't want to sound cruel, but these are the situations that healthcare puts everyone under, right? Like, I'll give you an example. There was a homeless guy at my hospital system. This guy he was hilarious. This guy was a diabetic. He's homeless. And if you looked at his feet, bro, they were absolutely just demolished. Like when you have diabetes and it's uncontrolled diabetes, your A1C is hitting like 11s and 12s. It's bad. This guy had this massive infection in his foot. And the surgeon's like, hey, listen, we're going to have to amputate your foot. And the guy's like, listen, you can amputate my foot. You can amputate all the way to the knee. The problem is I don't have anywhere to go. So the infection is just going to keep coming back. You know, like if you don't take care of the people, they're going to cost you in the long run. So yes, the surgeon can perform a $20,000, $30,000 procedure, cut his leg off, give him to physical therapy for a little bit. But then what ends up happening is the guy goes back on the street again. 6 months later, he's back for the other foot. And then he's in a wheelchair, you know? So and once you're in a wheelchair and you stop ambulating, that's it. You're going to have all sorts of secondary issues that come around where you're going to get skin infections because you're probably, if you don't have a place to live, you don't have a place to shower, you're going to get more infections. You know, you're probably not, you know, living in a very sterile environment. It's in a dirty environment. So all of these problems, they tend to compound on themselves. And the thing is, to solve this issue, it's just very difficult. You know, and we are a moral society. If we weren't a moral society, these things wouldn't be a problem. We would just say, oh, you're homeless, go die somewhere.
Deal with it. Yeah, deal with it.
Deal with
Interesting.
it, you know.
So I know that you were a fan of UNH when it dipped below 300 in the past. What is the Chris Patel's thought here? I mean, obviously, I don't hear you jumping in with both feet at the moment. Is it something where you're gonna play a cautious eye and wait for it to potentially settle out before you potentially dive deeper into it? Or is it something where you have enough exposure already, along with other people that might be in it as well? Because I know a lot of people, it's not just you, right? A lot of people have been involved in UNH with its volatility recently over the past 6 months or so. So I'm just kind of curious where your head's at on that. I personally am not in it. I know that we were in it at one point in the public portfolio, which we are not anymore. So yeah, just wanted to get your thoughts on that.
I have enough exposure as it is, so I'm not gonna like go crazy with it. I think one of the challenges that UNH is gonna have to deal with is there's definitely a re-rating in perception. So future multiples could be a lot lower than they were historically, right? So even if the business starts to improve, and it looks like the business is starting to improve, so you're starting to see margins starting to recover. You know, UNH is taking all the steps necessary to protect its margins. The problem that you run into is that there is this vulnerability that's been exposed in this industry. So even from an actuarial standpoint, you know, it's almost like you don't think that you're in a risky company because it's always growing at 15 to 20% year over year. So you're like, oh yeah, I'm just going to chill. It's autopilot. Everything is good. And then all of a sudden some major policy headwinds come around, and now your vulnerabilities are kind of exposed and laid bare. So the market says, wait a second, you're not that safe 15 to 20% growth compounder anymore. You're that company that's going to grow, but at any point, if something happens like COVID or medical cost inflation, all of a sudden now your margins are going to get crushed. And if your margins get crushed, that means that you're not a steady investment. And so people are going to say, listen, I'm not going to give you a 25 multiple. I'm going to give you a 15 multiple. I'm going to re-rate you, which is normal, right? Like, think about it this way. If you are in a non-risky utility company, you're willing to pay a higher multiple. Why? Because you know that you have this steady cash flow. It's up into the right business. But now all of a sudden, so let me just share this 1 second. And
well, Chris is saying we got in August 2025, held for about a month from 305. Some of it was 292. Some of it was 305, some of it was 292, but we held to about 350, and we made about 18% on the trade within a month. And that's why we took our 18% and we got out.
Yeah. Okay. So if you look at this is United Healthcare EBITDA for the last what is it, since December of 05. You can see that every single year. Oh, sorry about that. Share screen. Boom. There you go. So you can see here, this is the EBITDA for United Healthcare. United Healthcare was up into the right business. So people are looking at this and saying, wow, this is amazing. You know, like, this is a growth compounder. It just keeps growing and it grows at a steady pace. It buys back. It does share buybacks. So if you look at its earnings per share, you can see the EPS was growing at a nice steady pace. Let me actually just bring this up. So people looked at this and said, wow, this is a steady Eddy compounder that has growth built into it every single year. And it was growing at about 10, 15% every single year. 2024 comes along. They had an issue with a cyber hack with one of their subsidiaries called Change Healthcare. And so they had to take a massive hit, but it wasn't a cash flow problem for them. It was just a hit on net income. So they had to realize some losses on it. And basically because of that, they kind of went down. And in 2024, the company started to see some problems with utilization, right? So basically what happened is what we were just explaining right now. Utilization started to climb up. And at the same time, the reimbursements, the Biden administration put in policies in place, something called V28 Medicare changes. And basically that sort of lowered the amount of money that United Healthcare could charge for Medicare Advantage patients. And because of that, United Healthcare had to bleed margins. So if you look at United Healthcare's margins, they ended up compressing pretty significantly over the last right here. So let's just do operating margins. And let me just hide this. So you can see here from all the way 08 to 2024, their operating margins were, roughly between 6, 7, lower times it was 7, higher times are 8 and 9%. So this is not a high margin business. Okay. because operating margin is 9%. The net profit margin is, look at this, 6%, right? At the highs, it's around 6%.
I was going to say
Same.
half.
Yeah. So it's about 6%. The problem is this is running such thin margins that if you have any deceleration in your profit margin, it goes down. And so the profit margin went from 6% to 3%. So your profit margin got cut in half, right? So this is the major problem that United Healthcare ran into, which is their margins absolutely collapsed. Now, one of the reasons why their margins collapsed is because of this issue with their growth. So what happened was in 2004, they were starting to slow down. The revenue was essentially in 2023, total revenues. There we go. The revenues were starting to slow down. So let me just do revenue growth. Okay, so you see this right here. 2023, the revenues grew by 15%. The year after that, it was 8%. So when they saw this, they said, oh my God, our revenue is going down. One of the things that we need to do is we need to get our revenue back up again. Because if we're not growing our revenues, market is going to hate it. And if the market hates it, we're going to get re-rated. So what did they do? They went hard after Medicare Advantage patients. And Medicare Advantage patients that CVS Caremark was shedding at the time. The problem is a lot of the patients that they took on were some of the sickest and most unhealthiest patients. So when you take on sick, unhealthy patients, you got to work them up. You got to go extra hard in trying to figure them out and diagnose them and treat them and everything else, all that stuff. But basically the cost of treating those patients ended up becoming extreme for these guys. So because of that, one of the challenges they ran into is that their medical cost trends started to get elevated. So on Medicare Advantage patients that they took on, it got expensive. So if you see here, their revenue growth last year went up by 12%, but their margins went down by almost half. So look at that growth in revenue. So they went from 370 billion in revenue to 400 and almost 50 billion in revenue. So people would look at this and be like, oh my God, this company is doing half a $1 trillion in revenue. That's amazing. Everyone should be in this company. Who does revenue like this? The problem is revenue is not the most important thing in this industry. The most important thing is operating margins. So if you collapse your operating margins down, that means that now as a shareholder, you're getting less, right? So this is where United Health is working on getting back to this 7 to 8% amount. And it's going to take a good amount of time for them to get back there. Now, according to analyst projections, it looks like they're probably going to get there by 2028. They're going to take a lot of draconian steps to get there, but they're going to get back to where they need to get to. And the way that they're going to have to do it is by, unfortunately, number one, cutting back on people that are sick.
High risk.
High risk. That's that better word for it. High risk. They're going to have to tailor their networks to be a lot more narrow. They're going to have to cut benefits. They're going to have to raise deductibles. They're going to have to raise copays. They're going to have to use a lot of more generics instead of branded products. And people are not going to like that. People are going to hate it, of course. But this is what the insurance companies can do, right? Now, if they were the only ones doing this, this would be terrible for United Healthcare, because then they would end up shedding a ton of members, right? So if right now United Healthcare is raising its deductibles by a crazy amount and your copays are going up, then that's a problem. That means that all these people were going to switch over to, like, let's say to CVS Caremark, or they might switch to Elevance, or they might switch to somebody else. The problem is every other insurance company is in the same boat. Everyone else is doing the same exact thing. So you really don't have a choice, and United Healthcare, because of the scale that it has, it's probably going to be able to extract a lot more value in its negotiations than some of the other guys are going to be able to do. And that's basically the bet that the market is making on United Healthcare long term. So eventually they will get to the point where, their margins will recover, purely based on like just mathematical understanding. One of the key things with United Healthcare is one of the reasons for their growth has been that they have been prolific buyers of other businesses and incorporating them into their ecosystem. So if you see here, this is the let me just take away EBITDA. Let me take all of this stuff away. So if we look here, this is the cash from operations. So, and I'm not going to do projection. I'm just going to do up till 2025. And let's do purchase of businesses. Okay. So one of the things about United is that United was like one of the biggest roll-ups in the health insurance industry, where they were buying a ton of companies and provider groups underneath them. So if you look here, United Healthcare, its operating income has been growing steadily, and in 2023, their operating income was almost $30 billion a year. Just let me say that again: $30 billion in ops cash. Insane,
Not bad,
right?
Not bad.
The problem is, one of the reasons why they were generating so much ops cash is because look at this acquisition spree that they've been on, acquiring all of this stuff. And because of that, they loaded their balance sheet up with a lot of debt, right? So if you look at here, their liabilities, total debt, their debt levels went from right here around $16 billion to now almost $78 billion in total debt, right? So when you acquire all of these businesses, yeah, they'll add to your ops cash, but then also if you take it on using debt instead of free cash flow, you're going to have a major problem, because now you're going to just, load up on a whole bunch of debt. So if you look at their debt, it's funny. I'm supposed to be making a case for investing in United Healthcare, and I think I'm making a case why you should stay away from United Healthcare. So cash from operations, so net issuances. Okay, here we go. Issuance of long-term debt. So let me just take this away. Total debt. And that's payments for businesses. Let me take that away. I want to do a clean show to show you guys how they utilize their cash. So let me just start from start fresh. Okay. So the first thing is, how much cash are they generating, right? How much money is going towards investing activities, including CapEx? CapEx is, believe it or not, very steady for these guys. They spend maybe like 2 to 3 billion on CapEx, and that's it. We're going to put issuances of debt. So we're going to do net issuances of debt. And then we're also going to do share repurchases, because one of the ways that they reward shareholders is by share repurchases. And then, of course, they have a dividend that they pay out. So that's where it's going to end up going. So, and we're just going to line everything up so that it's easy to follow. Okay, let me just break this to here. And let's do this. Okay, so you guys can see this is how they utilize their cash flow. So you can see, let's do 2024. 2024, they generated $24 billion in operating cash flow. They took on $14 billion of long-term debt. So now they took these two things on. So that gives them almost $40 billion of cash. Okay. Of that, they paid $7.3 billion in dividends. They bought back $9 billion in shares, and then they invested $20 billion, usually $2 to $3 billion in CapEx, the rest in acquiring different businesses. And so, like I said, they've been a serial acquirer of a ton of businesses that have been helping them grow their cash flows. Now, of course, we run into December of 2025. They spent about $8 billion in investing CapEx, $7.9 billion in dividends, and share repurchases of about $5 billion. So one of the trends that we're likely to see in in 26, 27, and 28 is that their operating cash flow is going to go in the right direction, right? But you see this acquisition is probably going to go to zero. They're probably not going to acquire too many things. And instead, they're going to be focusing on paying down the debt. So one of the goals that they have is in 2026, they're going to pay down a good amount of debt and get back to a leverage ratio that they've had in the past, which is like usually 0.4 debt to equity, so that this way they remain a strong creditor, and the rest of it can go towards other things. So, once 2026 is over, we'll know more in 2027 how they plan on deploying their capital. But at that point, the share count should go down materially, and this right here is like a nice glide path for them for basically a recovery. So this is not a quick turnaround by any means. This is a business that's in transition. If they operate under the right leadership, I think this business can be saved and at the same time actually expanded upon, but it's not going to be something that's like an overnight turnaround. So some people are expecting $600 by the end of 2026. And I'm like, good luck. Like, is it possible? I don't know. Maybe they find a gold mine underneath UNH headquarters in Minnesota.
Well, let me ask you a question. Is a lot of times, so I'm going through I think by April, I'm switching health insurers as well through my employer. I guess likely due to something that you were talking about, whether the care provider, the insurer came back and said, you guys are going to have to pay more in premiums or what? And then they said, no, hell no. So it's either that it came out of the employee's pocket or came out of the company's pocket. So one of the two, and I'm sure that would mean hell no. So we're switching providers at our company, to which I've heard it's interesting in terms of what they're going to be providing. But I'm kind of curious. I mean, do you see what happened with UNH to be something that, aside from these big hits that we're going to be seeing right now, something that happened over the course of several years? Or is it more along the lines of something that kind of happened all at once, where it kind of got smacked due to one particular impact in regulation, and now they're obviously going to potentially get smacked again based off of what was passed today?
It wasn't passed. It was just proposed. So one of the challenges is that if the cost of care is going up by 5% and the government says, hey, listen, suck it up, buttercup, we're not paying you 5%, we're only going to pay you basically 1%, you got to make up for that 4% in other ways, right? That is what UNH has to deal with. Now, do I think ultimately that the government CMS lands at 1%? Probably not. I think that this is just a hard fought negotiating tactic by CMS, because one of the challenges that you run into is, the government's got to be a steward of capital too. They can't be like, yeah, let's just give out money to everybody. Insurance company says, I want 10%. Doesn't mean you give them 10%. Hospital systems say they want a 10% raise so they could pay everyone 10% more. Like, no, everyone's got to basically, come up with a reasonable number that everyone can make the system work in a way that actually benefits people. So UNH and CVS and Humana, they're going to send their lobbyists out. They're basically going to do whatever they can to try to, basically say that, oh, look, the Trump administration is trying to kill grandma by not, increasing Medicare Advantage like reimbursements. And that's like one of the reasons why I had a post on today on X. Let me just show you guys. One of the reasons why everyone is always wondering why boomers get like the benefits of what is that thing called, of like all the policies. One of the reasons why is the boomers, they vote, bro. The number of like citizens who are 65 and over, the people that vote, they vote at a pretty disproportionate rate relative to their population. So if you look at it, 68% of people in Florida, like the share of 65-year-olds that are voting, almost everyone votes in certain parts, so if you want to keep these if you want to win elections, you better keep these old timers happy, basically. So right now, UNH has very strong lobbying power. Same thing with CVS and Humana in basically going after the politicians and saying, if you don't support a rise in Medicare Advantage payments to the degree that we need by our insurance companies to survive, we're basically going to get a whole bunch of attack ads out against you. Right. And by the way, this is not like, oh, they're going to go after Trump. They're going to go after Trump. They're going to go after the Democrats. They're going to go after anyone who basically stands in their way. That's just how lobbying works. Right. So I expect to see you. And if you're in one of these cities and states that has like a really big boomer population, be prepared to see a lot more like ads that show grandma basically sitting and saying, I used to have healthcare that was affordable, that I got to see my doctor, and now everything is gone. And this is, people are going to tug at the heartstrings, and because it's an election year, you're going to see it more often. So, you're going to see politicians come out and say, no, I am for Medicare Advantage. I am here to protect our seniors, and so on and so forth. So
they're going to see the opposite person saying he said it is for Medicare, but at the same time, in 2002, he voted against blah, 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 blah. Yeah.
Taking care of seniors. He wants to see your grandma die,
Yeah.
It's like, this is how politics works, right? This is unfortunately the reality of things. So one of the things that leads me to believe that Medicare Advantage rates are probably going to be closer to the higher range of probably around maybe 3.5-4%. So the health insurance companies won't get everything that they wanted. They would like to see 5, maybe 6% rise in reimbursement rates, but they're probably going to settle for 3.5-4%, maybe even 5 if they get enough people to kind of side with them, in which case the market will re-rate UnitedHealthcare, re-rate their margins and say, oh, look, their margins are magically going to be better. And then the stock will go up to the 450s again. Not 450, sorry, 400s. At least that's my level of thinking on this. So I would say that at current prices, I think UnitedHealthcare is theoretically a buy, but it's not like a strong buy. If this thing dips below 250 because of just poor sentiment like it did last time, that's where the optimal range is, where you really want to, take some size on, because at that point you're discounting a lot of bad news. Right now, there is some news that's kind of baked into the price, but it's not nearly as bad. So I know, by the way, everyone in the chat, I know this is politics 101. Sometimes you just have to let it out, but this is how the political situation in this country works. Okay, whether you agree with it or not, it's a whole different conversation to be had. But I do think that eventually that proposal is going to get re-energized, and like I said, we might see probably 4%, and in which case that decision is going to come out in April of 2026. So let me just put CMS proposed rates for 2027. Let me tell you exactly right here. CMS will accept comments on calendar year 27 advance notice through 11/59 through February 25th, 2026, before publishing the final rate announcement on or before April 6th. So this is a very important date. So if these rates get extended out, things will be okay. If they don't get extended out and you get a 0.09%, you got a problem. And UNH will probably, and same thing with CVS and all of these guys, they'll probably end up taking it on the chin. So just be ready for that. One of the other changes that could impact UNH more than someone like Elevance is something called charting, coverage through charting. Let me just show you. Chart. Okay, you see this right here? This is actually a bigger change that is scaring some market participants in UNH. Right here in the advance notice, CMS is proposing to make updates to MA risk adjustment model that reflects more current costs associated with various diseases, conditions, demographic. In addition, CMS is proposing to exclude diagnosis information from unlinked chart review records, which is a diagnosis information not associated with a specific beneficiary encounter. So basically, sometimes what happens is, let's say you go to the hospital and you get seen and everything else, and there's like charts that happen. Sometimes these things can basically code using just the chart and saying that, oh, this person has X condition. So usually Medicare Advantage, they pay you, the insurance company, based on the condition of the patient. The sicker they are, the more they pay you, right? So if you can accurately track the amount of sicknesses that a person has, you can kind of demand more money from Medicare, right? The problem is sometimes these insurance companies, and this is a practice that some people find unethical and controversial, they upcharge the code, where it's like, oh, this person has a headache. Oh, they have, like migraines. And so the code for migraines could be higher than something with just a plain headache. So sometimes what happens is these insurance companies, in order to kind of boost up their profits, they might embellish extra on what the person could have as a disease state to get paid more. So CMS is saying, look, one of the things that we want is that as a result, diagnoses that are not reported or associated with the surface would not be considered for risk adjustment, which means that if you're not actively being treated for that specific thing by a provider, by actually being seen, that's not going to get calculated into your risk adjustment scores. So this could be something bigger for Humana. It's a bigger problem for Humana than I think it is for United Healthcare, to be honest. United Healthcare owns its own provider network, so they can basically go and have a bunch of encounters with the patients, whereas I think Humana kind of just has to pay. So there's a lot of market dynamics that could arise from this. But yeah, I think the bigger part to all of this is just, what is the reimbursement rate going to look like in 2027? If it's not at least 4 to 5%, that means that Medicare Advantage benefits could be cut back significantly to protect margins, while at the same time, it'll be difficult for the insurance companies to restore their margins to pre-COVID levels if that's the case. So we'll see what happens.
Well, you definitely know way more about the healthcare space than I do. That's for damn sure. Very curious. So a lot of people are asking you. I think you already stated it, but as a summary, shit's still in flux. There's more to potentially come out that could potentially drag down the stock further. You're not adding. Still potentially more price to go down in the rest of the week, if not into next week. What else am I missing? Things to also potentially come in February, it seems like, as well, from what you're saying.
Yeah, man. A lot of this stuff is just, it's really about execution at this point. Like, the company itself has to, their past CEO, the guy right before the current CEO actually came back. He's the one that set up Optum, and dude's a freaking genius, in my opinion. Like, the way that he set the business up. After he left, they had someone else come in, and this guy was running the company from the UK. He wasn't very paying attention nearly as much as he should have. The actuarial nuances of this business were kind of in the penalty box for this guy. I mean, he just was not necessarily as good as predicting things. Like Stephen Helmsley, who's the current CEO, this guy's like a rock star in the industry. Like, one of the reasons why United Healthcare, compared to a lot of the other companies, has done extremely well over the course of the last 10 years is because this guy is like one of the most detailed oriented, strict bosses, very focused, laser focused on managing risk, managing value, and basically paying attention to things, and just creating a system where UNH became this giant juggernaut. After he left, new guy comes in, new guy says, we're going to do this, we're going to do that, we're going to do the other thing, and things kind of just fell off a little bit for UNH. But one of the major things is that cost control factor, right? And this is the fate of Berkshire Hathaway after Warren Buffett leaves, if the people that he puts in place don't do what's going to happen. This is one of the challenges that you run into with leadership transitions, where you've got this company whose entire structure is based on the leadership structure of this one guy who knows what he's doing. And then you're supposed to just hand it over to the next guy, and he's supposed to figure everything out. And it's, and sometimes they do a great job and they're able to take over. And a lot of times they can't handle it. And you see these leadership transitions, whenever they happen, they could result in some major problems. And so now that Stephen Helmsley is back, and he's back for at least 3 years, there's people in the market that have a lot more confidence in UNH being able to basically survive and thrive,
Well, we have a lot of companies reporting tomorrow. So we have Microsoft, we have Meta, we have Tesla. All together, that's over $5 trillion worth of companies. That's not even including ASML and IBM and a bunch of other secondary and tertiary companies that are still within the S&P 500, but very far out of the top 10, and more so even out of the Mag 7. Not sure how much you got into it yesterday with Steve, but I'm assuming you're in the same boat with respect to Meta. You think that because of the Big Beautiful Bill, you think that this quarter, as long as they don't hyper focus on Reality Labs, that the company will probably end up in a good result? Do you see a big pop tomorrow? What do you think for Meta?
No clue, man. With Zuckerberg, it's anyone's guess. Zuckerberg sometimes comes out and says the right things. The market loves it, and he goes up. And sometimes he says things that the market doesn't like. Like when he came out and said, "Listen, I know we've spent all this money on AI, and next year we're going to spend more." The businesses, they seen Zuckerberg's penchant to overspend, especially on Reality Labs. So they don't give him nearly the amount of credibility that someone like Tim Cook, where they look at Tim Cook and Tim Cook says, we're going to spend money on X. They know that there's ROI at the end of the tunnel, for the most part. There's, of course, projects that Apple never really succeeded on. But the point is, there's an ROI element. With Zuckerberg, there might not be ROI. And that's the part that scares investors. So depending on how he presents the case tomorrow, we'll see what happens. I mean, it's kind of like that with Elon. I was telling Steve, I said, if Elon, like Tesla could have the worst quarter in the history of Tesla, and Elon comes out and says, we've got robots on the way, the market gives it its premium and the thing shoots higher. With Zuckerberg, if Zuckerberg says, hey, listen, we've got this new opportunity, people are like, no. It's a place where he's going to dump money. So I don't know. It's anyone's guess. I'm actually more excited about Amazon. I think Amazon has some major catalysts ahead of it. What do you think? I actually loaded up on some Amazon a couple of days ago.
Yes, I do. I do think Amazon will do well, but let's reserve that for later this week, if not next week, because Amazon reports, I think, on Tuesday or Wednesday of next week. Curious, you did talk a little bit about Tesla. That reports tomorrow as well. World Economic Forum, Elon Musk was talking about where robots, and actually consumer robots, will eventually outpace all the humans in the world. And also, he stated that by the end of 2027, there will be actual sales. Do you think that is going to play a factor into tomorrow? Do you think they're going to keep that for another quarter or two before they give more firm guidance in a quarterly earnings report?
I'm not a Tesla guy, so I couldn't tell you. I'm just not. So I don't keep a track of Tesla nearly enough to be able to kind of determine what the outcome is. Like, to me, I've always seen Tesla as an overvalued, EV company with these side projects. And I've sort of been wrong on that. Like, it seems like Tesla does have it's almost like a bit of a hydra these days, where they've got all sorts of business lines that are, that are not connected to their auto business, that have asymmetric return possibilities, and the market's comfortable paying up a giant premium to see Elon's vision fulfilled. I think that his vision at times is great, but at the same time, it takes a really long time to get there. So the economics don't work out, in which case there are times where, the market doesn't trust Elon also and tanks Tesla 20, 30, even sometimes 50%. I mean, it wasn't too long ago that Tesla came all the way down to 200. So not the biggest fan of investing in that kind of like personality driven company. I know that sounds bad, but I'm not a big fan of that. I'd rather just go for the steady eddy compounders, especially when the market is where it is, especially where the market is right now. Man, why'd you make me say now? I'm going to get all the freaking Tesla hate. I hate talking about Tesla and I hate talking about Palantir, not because I don't have thoughts, but because my thoughts always end with fuck this guy.
Hey man, I mean, in terms of where I'm at, I think that the EV part of the company is continuing to really face market margin shrinkage. I mean, it wasn't too long ago, literally less than 4 or 5 years ago, where people were telling me they were going to have 30% margins forever, and obviously that is now single digits and shrinking as well. I think, to me, where the big potential lies within the company right now in terms of revenue generation and as well as ops margin is in the Tesla energy business. I think are over 30%, 35% of the market share worldwide. And I think the only reason why they've lost market share to one of the Chinese competitors recently is because Tesla's main focus is Western countries, although it does sell a little bit to Europe as well. But a lot of the Eastern countries do not buy from Tesla. I'm not sure. I don't think it has anything to do with the Shanghai factory or anything like that. I think it's more along the lines of people just wanting to buy from China rather than potentially buying from Tesla. And it's probably more premium priced product. The thing that I'm curious about is if the margins of that energy business continue to hold up. I think the reason why they've been doing so well is because they also sell an operating system with it. But from what I've understood is that operating system is only for use in the mega packs. So you can't take that operating system and use it on any other sort of battery storage, which leads you to only being able to be on Tesla mega packs, which from a ecosystem perspective is good. But if you're thinking about being able to sell that software across all systems, it kind of gives you the potential to kind of hold you back because there's still a lot of battery packs being sold worldwide. And for people that are understanding what the software is trying to understand when peaking is going on so that it smooths out how much energy is being exported versus input, and when you buy and sell to be able to bring into the battery to be able to make kind of an arbitrage off of that. So the last piece being the robotics, based off what he said in WEF, he sounded like the World Economic Forum. It sounded like he was pretty bullish on stating that robots are soon to come. So I'm anticipating something is gonna drop tomorrow with that. Microsoft tomorrow also, $3.5 trillion company. I continue to think that Microsoft is doing really well from an Azure perspective. I don't think by any means in the short term that their cloud market share is going to take a big dump or anything like that. I think it's going to be par for the course for Microsoft, and they've already kind of come down in terms of their multiple. So I don't necessarily think that you see a large drag. If anything, I think you'll see a decent hit on the mark. I don't think it'll massively beat or anything like that because I think the earnings are rather predictable. But I don't foresee anything coming through unless there's some big beautiful bill things that happen with with Meta that other companies start to take as well, which could potentially happen with Microsoft. But I don't potentially see that coming through. Maybe it does. I don't know. Maybe I'll be surprised.
Did you see that move in Rich Tech Robotics?
No, but I saw somebody post about it.
It's up almost 44% today. Interesting, right? We spoke about it last time.
Did you buy it?
No. It's too small for me, man. I don't know. Maybe I should buy some as a speculative position and just, let it do its thing. You never know with these. Now it's a $1 billion market cap.
Billion.
I don't have a lot of speculative names, man. I just, yeah, I'll stick to Amazon. I'm good.
Stick to the Zon. No, I think Amazon will do well. Going into next quarter, I think it is undervalued comparatively to the rest of the Mag 7. Is it cheap? No, not dirt cheap, but I definitely think that comparatively to Google, it's cheap. Google's been I'd say Google's a little bit on the high side, and it could stand to stay where it's at for a couple quarters before moving upward. If not retrace, good 5%, 10%. What else? Yeah, Meta, I think will benefit tomorrow. I think we see it over 700 before the end of the close because of the one big beautiful bill last quarter having a massive impact on net gap earnings, and that no longer being something that happens in this particular earnings report.
Yeah, I agree. Yeah, man. Are you excited for New York?
I am. I'm excited to see everybody. I was hoping to get lunch with Steve on Friday, but he has some other things that he can't get away. Excited. You're coming in Thursday, so it's
Thursday night.
And I'll be getting in like super late at like midnight on Thursday. And then I'm trying to figure out where in New York I'll stay because then on
where are you landing? What airport?
I couldn't find anything into Newark, so I'm flying on LaGuardia. Yeah.
Okay. And you're staying in the city?
I think Thursday night I'm staying in the city, so I'm trying to figure out. I was going to try to be around where Steve works, but if I'm not meeting him, then I'm trying to figure out where exactly I'm going to stay for some late night eats or good breakfast in the morning. I don't know, and then eventually make my way over to Jersey.
If you're by 53rd and 6th, you could get the chicken and rice from there. I've been wanting some damn street halal cart food for good 6 months now. Yeah. I haven't been to the city in a while, so I don't know why I'm craving it, bro. I know it's bad for you, it's disgusting, but it's just something about it that just.
What do you mean disgusting? Like it's just not high quality or what?
Bro, it's probably the lowest quality everything, but it tastes amazing. Some of the meat that they have is probably mystery meat, dude. But it's so good.
What is is it a cart or is it an actual establishment?
Okay, so there's this. Okay, so back in the day, this is when I was still at Stony Brook. Back in the day, they didn't have a lot of these halal carts around. So you had to go to 53rd and 6th halal cart. This truck, and basically it looks like this, and they have chicken over rice, and the white sauce that they had was like this. It was like crack, bro.
Oh, it's just Halal Guys.
Yeah, it's Halal Guys, but this is like the original Halal Guys. This is what it looked like. So I remember anytime I go to the club in the city, I went the best drunk food, because this was be open late at night, is going to 53rd and 6th. And this is where you would just get a platter. You'd get your $5 platters. I mean, back then it was $5 platters. And you'd just go to town, man. Now the halal carts are everywhere. Now the halal carts are everywhere. So everywhere
we got Halal Guys all over Houston at this point.
Yeah, but it's not the same, dude.
It's not the same.
It's not the same.
They used to come it's interesting. So we used to get the branded white sauce that who knows where it comes from, but now they're the white sauce isn't even in branded containers anymore. It's who knows? It's just knockoff Halal Guys. Is this how it's going to be forever, sort of thing, or they're just trying to get every penny out of it that they can.
No, I mean they started opening restaurants, and I don't know. There was a mystique about it when you got it off the cart that you just don't get from eating it like from a store. So like there's a Halal Guys in Chambly right here by me. But it's an actual like physical location. And I've gone there. Me and the wife have gone there a bunch of times, and it's just not that good.
No,
It does not give no. I don't know what it is. It's just not good. No.
maybe you're getting older too, Chris.
Maybe
Is
I
that-
like
I-
eating
The gross,
Yeah.
the greasy stuff. I remember like I had a Pepsi the other day, and I was like, "This isn't even good."
that. See what I mean? Look at this. They're actually using gloves. They're actually keeping a sterile environment. That's not how you make halal food, bro. I mean, this is not how you make halal like the street cart. You know, the street cart is when the guy is taking dollar bills from you and rubbing his butt, you know, to get the sauce off so he can give you change. And then he forgets conveniently to put the glove back on again or use a new glove. So he uses, you know, his bare hands to scoop up the chicken and rice, and his sweat gets in there. That's what makes it the flavor, bro. That's what
It's the
gives
flavor.
that Egyptian flavor, you know. That's like one of my friends. This guy, so with the hospital I used to work at, this used to guy like he used to call his halal cart brother from another mother halal cart. And I was telling him Mike, his real name is probably not Mike, but he called himself Mike, so I went with it. I was like, Mike, bro, you know that like it's really messed up how you practice no sterile food prep. And he says to me, Chris, that's the secret. And I'm like, bro, it's not. You probably gave COVID to like half a dozen people around here. You're just stupid, infected halal cart guys, halal food.
So I need to know the order. What's the order at Halal Guys then? For you.
For me, I just get chicken over rice with a little bit of red sauce. Don't get a lot of red sauce. A little bit of red sauce and just a lot of white sauce, and that's it. There's
Their
not a
red
lot.
sauce is no joke, dude. It's no joke.
Yeah, it's not complicated. You know, it's like, and it's like that anywhere you go. I don't get the mixed. Like I don't eat lamb, so I don't get lamb. I just get the chicken.
I always do the lamb.
Yeah, lamb doesn't sit well with my stomach, so I just
No?
I just do the regular chicken and rice. Sometimes I'll do a gyro, you know, or a gyro, whatever you want to call it, but for the most part, no. Yeah, man.
Chris, are you still doing the Patreon? People want the people want to know.
I am, but I haven't been very active on it. But it's just not a lot of opportunities to. I'll be honest. I've been having some writer's block as well. I don't know what it is. I feel like I'm in this rut of trying to find opportunities because I suppose I'm scared a little bit too that the market is running a little hot. So I don't know if I can chase a lot of these themes. I like the back of my brain. I'm getting this spidey sense of 2021 again. Like the bottom is going to fall out at some point, you know, and it's hard because like whenever the market is in that wave of momentum driven market rises, it's really hard to press that buy button. It's really hard. You know, if let's say we were at really low valuations, things are oversold. Yeah, I could ride some momentum. Like I did really well on Celsius doing that. I've done well on SMCI. I did some China stocks last year. But this year, I don't know what it is. It's just, and it's funny because like the first 30 days have been really good for the markets. I know some people are up almost 30-40% on the year and it hasn't even been a month yet. So I don't know.
You don't think like certain companies that have already gotten smacked 50-60%, like the Alclos of the world and some of that, but yet the rest of the market is still maintaining? I mean, you don't think that some of that speculative mindset has been smacked out of the market a little bit?
No, I think there's still plenty of opportunity for more speculation. You know, like I said, a lot of this is dependent on the administration and how they're guiding the markets. The one thing I can say for certain is that none of the mega caps are going to get hit with a 30-40% correction. unless something just major happens, like that just, I don't know, that destroys the company individual. The reason why is because if you think about it, the administration's goal is to keep the stock market high. And if the goal of the administration is to keep the stock market high, that means that they have to be extra supportive to the companies that are basically 30 to 40% of the general market. Like imagine Nvidia, imagine Google, any of these guys going down 30, 40%. It'll drag the indexes down. Everyone looks at the indexes because everyone now, almost like 50% of the population is doing nothing but just buying the S&P and chilling. You know, when you have nothing but S&P and chill, that means that your entire goal in life for the administration, at least for this year while it's an election year, is not to let the market collapse. Now, they can target individual companies here and there, like JP Morgan with that the challenge there. But overall, I think the Trump administration is going to do everything in its power to keep this market running. If there is a sort of a correction, the administration will likely be extra stimulative and basically pull out of any detrimental policy moves that might hurt the economy. Not hurt the economy, let me rephrase, hurt the stock market. Because the economy is not the stock market, the stock market's not the economy. But in President Trump's brain, I think it's the same thing. I think yeah, sorry, go ahead.
No. I try to cut you off. You finish your thought.
No, I mean, that's my logic in this, in that the president uses the stock market as a barometer for his success, right? He's cited it multiple times as saying, look, the stock market's all-time highs. 401ks are super high. So the last thing he wants to do is have the market correct 20% under his watch. And now all of a sudden, all the voters are like, what are you talking about? Like the market's not all-time highs. Like it's actually retracing. Like people that don't understand the currency don't necessarily think that they have a problem because it's not in your face. But dude, to go from 110 on the Dixie to 95 is bad. That means that you lost buying power. And relative to last year, the S&P was up 15%. But at the same time, you had the dollar go down almost at the same level. That means you didn't make any money technically from a buying power standpoint. So, I think this is where, I don't know, and gold is running up, silver is running up, means that people are probably
uncertain.
Well, I would say that they are scared of dollar devaluation, and the administration, one of their goals might be to devalue the dollar so they can pay off the national debt faster. Because I mean, the guy thinks on nominal terms. It's weird. You're not supposed to think on nominal terms when you're trying to determine GDP. You're supposed to try to figure out on a real basis. So it's like I said, I think it was Steve. I said, if the dollar goes down in 15% in value, even if you made 15% in the market, you basically did not make anything because your buying power did not increase. Does that make sense? Kind of.
Mm-hmm. But it's
like
somewhat relative to other entities, though, right? I mean, maybe I'm not thinking about that appropriately. When I always think about the dollar, I always think about it in Forex terms, and maybe that's not the right way to look at it. Maybe that's a blind spot that I have.
Yeah. So someone said dollar is weakening because inflation is going down. That's not how it works. The dollar is weakening because there's less demand for dollars around the world. It's plain as simple as that. It's a supply and demand thing, right? If more people believe that the euro holds more value long-term, they buy euro. If people think that gold has more value long-term, they buy gold. They sell dollars, buy gold. Value of dollar goes down, value of gold goes up. It's pretty simple. Same thing with silver. People say that there's devaluation. And it's funny because like one of the chair, I was actually watching this interview by one of the prospective Fed chairs. What's his name? Fed chair. Who's in the lead right now? Bali market. Fed chair. I can't believe I forgot his name. Fed chair nominates Fed chair Rick Reeder. So I was listening to Rick Reeder, and he actually mentioned this in November about going long on commodities like gold and gold and silver.
Investor.
Time we have mortgage rates too high, that's hurting a huge number of people in the country. We are seeing something in the country today that we haven't seen with this intensity in an extended period of time. Low incomes having a really hard time. And, you know, I don't agree with the thesis that, well, tariffs are inflationary, we've got to fight in tariffs. You think about, and by the way, it's half the country that's having a hard time. If you think about today, if you're being burdened by tariffs, and largely it's goods, so the goods are where lower income, middle income suffer from when you have goods inflation. To say, gosh, we're going to charge you a higher rate to borrow too, it doesn't feel like that is equilibrium. I think we can get that rate down.
Have you had your interview yet?
I cannot. I can't talk about that. I'm enjoying what I do. I'm enjoying being here with you. I'm enjoying investing. That's
okay. Fair enough. We obviously are having a pretty deep conversation these days about Fed independence and what the future of that holds. Ken Griffin wrote in the Wall Street Journal just a couple of days ago, quote, pressuring the central bank to adopt a more permissive stance towards inflation carries steep costs. These actions raise inflation expectations, increase market risk premiums, and weaken investor confidence in U.S. institutions. How do you feel about the issue of Fed independence? And what do you make of what Mr. Griffin had to say about it?
So a couple of things. So for the smart guy, I would say, listen, I think Fed independence is critical. You think about how today, one of the big critical items for this country is we got to fund debt globally. People have to have confidence in we're managing the currency, we're managing our debt stack effectively. So I think Fed independence and our debt costs effectively. I think Fed independence is superior in terms of importance. That being said, I still think there are creative things that you can do. And if you said to me today, inflation is running a little bit hotter, we've got some tariff transmission. I think if you go back 2 decades prior to COVID, we couldn't get inflation to 2. We couldn't get it to 2 on the high side. If you think about where the next 5 to 10 years are going to be, we are going down what I think is the most extraordinary period of technology, productivity, and quite frankly, after you get the fiscal tailwind next year, I actually think the bigger issue is going to be putting enough people to work. You're seeing it today, and you saw the revision in payroll today. You're seeing weak labor. If you strip healthcare out, you have negative job growth. I think people underestimate we're going to displace a lot of people from jobs. To me, for the next 5 to 10 years, yes, you've always got to manage inflation. You always got to be thoughtful about it. By the way, 5-year inflation break-evens today are 2.5%. If you got the funds rate to 3.25%, you're still above the rate of inflation. Today, if you ask young people about getting a job, if you ask people in urban settings about getting a job, it's really hard. That, to me, is going to be the secular discussion over the next few years.
Speaking of the discussion, I mean, what do you make of the way that both the bond market and the stock market are telling sort of different narratives about what the current environment really looks like? Tony Pasquarello at Goldman Sachs, I think somebody you know quite well, as do I, and I know he has great respect for your views on the market, and I think it's vice versa. He says bonds are principally focused on the current slowdown in the labor market, while stocks are looking forward to a cyclical acceleration. If equities were to get genuinely concerned about the growth outlook, the downside tail could really open up, given the interest rate strip is already pricing in a lot of easing. Is that fair? Do you agree with that?
He's very good. I would say a couple of things. One, I always find it hard interpolating what the market is telling you. Oftentimes the market tells you what the technical condition is. So think about the equity market. Earnings growth's pretty darn good. Like when you wrap up second quarter earnings, it's pretty impressive what we're still able, by the way, a lot of it through cost cutting. You didn't see a tremendous amount of revenue growth. Market is telling you earnings growth is pretty good and anticipated to continue to be pretty good. And we talk about it all the time. There's a massive amount of cash. The buybacks relative to the IPO calendar dwarf it. It's about $1.3 trillion versus 50, 60 billion we'll get this year. Technicals and equities are amazing. What the bond market is telling you is the funds rate is too high. We got to get that funds rate. What is neutral? I would argue, is it 3? I actually personally, given what we talked about around technology and productivity, I think it's a little lower than that. But the bond market's telling you we got to get to at least neutral, and it's going to happen I think it should happen faster, but it'll happen over the next year and a half or so.
What do you think the ideal portfolio is supposed to look like today? We're
So,
surrounded.
this is the most important part, Matt. And by the way, this is one of the reasons why I'm investing in PDI, because the belly, the curve discussion. And he's going to actually lay out a really good point here. And remember, this is from, I think, like November or something. So,
Surrounded by investors. We're surrounded quite literally by financial advisors who are thinking about that. Retail investors who are watching. I mean, what does it look like today?
Very different than the past. So maybe I'll start with the equity market. I mean, the first thing I would say, we're going through the most extraordinary technology dynamic I've ever seen before. I would stay long equities. By the way, you can buy volatility very cheaply to manage your exposure. I'd stay long equities oriented to where growth in technology is. In fixed income is amazing. You're still clipping 6%. Would I stay 5 years in on the curve? I'd still clip that coupon. We're extending a little bit out. And then, quite frankly, I mean, there's some interesting things to do in privates, bespoke markets. And I think hard assets have to enter the equation today. Gold, Bitcoin, things that give you a little bit of ballast in the portfolio against potential for currency depreciation.
When you talk about Bitcoin should be part of the portfolio, what kind of percentage are you thinking about? Is it a 5%, which generally seems to be what people are talking about, more or less?
It seems high to me. So I run our global allocation fund.
Mm-hmm.
You know, we're running long equities. You know, we're heavy income. You know, we're running, you know, in the 3 to 5% region on gold. Gold strikes me today as a better currency hedge. Bitcoin tends to trade with vol, tends to trade with the NASDAQ. So we're running considerably lower than that in crypto. I just think it's going to go up, and I think it's a good expression. But 5 seems high to me, but it depends where you are in your.
I mean, bro, I wish I had seen this interview earlier. I would have bought some gold. You know, next Fed chair telling everyone go out there and buy some gold, baby. I don't think he was up for Fed chair back then. Now he is. So, just saying.
It's a little interesting because they asked him during that interview, and you heard him like kind of shove it off. So I think it's pretty funny that now he's kind of in the lead for it. So
yeah. No, I mean, he's a very sharp guy. Like, I listened to multiple interviews because, you know, you got to get to know all the Fed chairs or prospective Fed chairs and what they believe in. So if he ends up winning out, I think actually be really good. I like it. I really like it. I think he would actually do very well. He's
do you think he's
some guy too? So sorry, go ahead.
Do you think he's right on labor shortages though? I mean, do you actually think that with AI and everything, everyone's thinking the opposite, where you know there's going to be massive layoffs and everything like that, and I think people are getting scared of what's happening with Amazon and what's happening at Meta, and they start to see, oh, all these AI companies are starting to see these synergies that they can start to feel like they can lay people off. Do you think that that's just a blip on the radar, and then the actual move is that there's going to be labor shortages?
I think so. I think right now you're seeing this giant wave of CapEx come into the country. I mean, look, the Trump administration, they've done a good job in convincing a lot of these companies to build here in America, right? So you're going to need labor. And at the same time, you're deporting a whole bunch of people. So one hand, you've got labor moving out of the country, right? On the other hand, you've got people that need jobs. So I think this is sort of a retooling of the American workforce where Native Americans, not Native Americans, but heritage, I guess that's the word, heritage Americans or people born here, they would traditionally work in the more white collar positions where, you know, the undocumented would occupy a lot of the labor positions. So if you have a lot less people occupying the labor positions, now you're going to have people that even if they lost their job in the white collar land, they could transition to the blue collar land and make their way there. So, you know, I think the economy is reorienting. I think some of it is slow. I think that there is probably some, like, the one thing I've noticed, I don't know if you've noticed this, but more people are skipping college and saying, I'm not going to go to 4-year degree, load myself up with debt, and at the end of the day end up broke. I'd rather just go and work in a, you know, in a factory doing X, Y, and Z, or learning to be an electrician or plumber or something. So I think there's a lot of people that have realized, especially in the 16, 17, 18, even 19, 20-year-olds, that have realized that they need to be a lot more conscious with the kinds of positions that they aim for, because a lot of them are going to be disrupted by AI. So there's no reason to kind of put your eggs in that basket. I mean, at least if you're smart enough to do it, that's what I would do. If I was 18 years old and someone says, yeah, I'm going to get a degree as I don't know, like an analyst or something, I'd probably not do analyst. I'd probably do like nursing, right? Or something in healthcare where it can't be disrupted by AI so easily, or one of the trades, like being a plumber or electrician, welder, because those are the jobs that AI can't really replace. You know what I mean? Like there's no AI robot that's going to come in and fix my plumbing. And a lot of plumbers and a lot of electricians, they make 6 figures. Why load yourself up with all that debt?
Yeah, I think unfortunately college was kind of a lie that and hear me out before everyone jumps on this. I mean, I feel like college was kind of a lie where everyone that was my age was kind of promised or told that you just need to go to college to get a higher paying job, but they weren't told specifically what degrees to get, right? They were all just assuming, okay. And I think because of that, because of what colleges were the stories that were being told by the older generations of, you need to go to college, you need to get a degree, etc. The universities took advantage of that to expand into degrees that people would feel more, I guess, happy to be in, rather than recognizing that there's some goddamn hardworking career degrees out there that aren't that fun, right? Like you kind of need to put your nose in a book and get after it, versus doing something that allows you to kind of party all the time. And I noticed it when I was in school, the people that were able to party all the time and what kind of degrees they were getting versus, some of the sciences and, STEM sort of degrees that I was involved in and many others were involved in, and the lack of partying that these guys were able to do. So I think people are starting to recognize that it's not necessarily just about going to college, but what degree that you get if you're going to college, and is it even worth it? And even still these days, you're starting to see people. I don't know how true this is. I'd like to actually see statistics, but what I'm seeing a lot on X and many other areas is people saying that they've applied after college to 300, 400 places and have yet to get an actual interview. I would love to see how real that is. I haven't seen actual data. I've seen people posting on X, whether or not that's like an actual university study or something like that. I'd actually be very curious, but I've heard that is the case these days because you're able to find so much. But at the same time, I hear the opposite, where you need more people to work. So I don't know really what to believe in some of these things. Sometimes I think that people have a hidden agenda, and sometimes when they post on X. So
Heinzie's like, I would have done ultrasound over nursing. Nah, Heinzie, you don't want that. You don't want to do that. Trust me on this. You don't want to do that. Heinzie, he's a nurse, right? He's saying I would have done ultrasound over nursing. Nah, bro. You don't want that. You don't want that life. I learned, I don't even know if I should describe it or not, but I mean, if you're a male sonographer and you have to do like a transvaginal, bro, you will regret becoming an ultrasound guy. Okay. You'll regret it. It's not as fun as you think. It's not as fun. I do X-ray, Heinzie. X-ray is the way to go. X-ray is easy. So is CT and MR if you're smart enough. You can get the technical part. It's easy. Don't do ultrasound.
There you go. Well, be sure to check out the description. Get all. I'm not sure if you had any other thoughts, Mr. Patel, but I was going to call it there. Do some reading before bed.
No, man. I'm pretty much done. Just
okay.
it's sad like to see the portfolio take like my IRA has a healthy UNH position that I had a lot of gains on, and I haven't opened it yet because I'm just too afraid to look. Because I swear, dude, I sold it in my trading account like just to be safe because it did really well. So I was like, all right, let me take some money off the top, make sure I'm de-risking, and I was about to sell some of it. And I was lazy about it. And now UNH is taking a tumble. And now I'm like, God damn it, I have to hold this thing again. I'm still up on the position because I got in really, really low at like when it was 230s. But God, man, I don't want to see my gains evaporate.
Zero.
It's not 0, but it's just sometimes your own laziness can get you into a bit of a funk because you know what the reason why I didn't sell some of my UNH in my IRA was because I tried to log in too many times and I forgot my password and I didn't want to reset the damn password with the forgot login thing, and I was like, I'll do it, whatever. And then I didn't realize it was like earnings, and then I was like, it's okay, it won't be so bad. And then that stupid news comes out at 4 o'clock in the afternoon. And it's like, what the hell? It's okay. It's okay.
But yes, appreciate your time and your education and knowledge when it comes to UNH and kind of that whole insurance industry. I think that was very useful the first 50 minutes to an hour today. And anybody that's curious, please be sure to follow Chris on X. He's a very much better poster and provides a lot more insight than I do. I mostly just ask people when Lambo. So Chris definitely provides more insight when it comes to that. But be sure we're getting close to 5K followers here on Cashflow Chronicles. So if you're watching this and you have yet to subscribe, please hit the subscribe button so that hopefully within the next couple days we're able to hit 5K. And what else is there? Hopefully for you guys that are listening, the over 3,000 to 4,000 of you guys that listen after the stream ends, hopefully you'll be in New Jersey, and I will be happy to see you there. And I know Chris will be there as well. So apparently some really cool news is going to be unveiled. Nothing from me, but I heard some interesting rumors about some potential stuff to be unveiled at Sunday. If you guys are in Jersey, I think that there's one or two more spots, or not one or two, but a few more spots. I don't know if Amit has closed it yet, but last I heard this was yesterday or the day before, there were still a couple spots open. So I'll be there, Chris will be there, Steve will be there, Tevis will be there, Tanner will be there, lots of people. Roy will not be there. Who else? Tess will be there. Doug, Sam will be there. Oh, Sam will be there. Nice. I haven't met Sam in person, so I'll meet two new people.
I haven't met Sam in person either. So
yeah, there you go.
Yeah. I haven't met Steven in person either.
That's true.
Yeah. Have you met Steven in person?
Once.
Where? When you were
when I was there for the Palantir event in September last year, I begged Steve, and I felt bad because his phone was ringing off the hook, and I could tell he was stressed to shit. So he really made it work. Hey,
what's going on with Nvidia? Why is it up overnight?
Is it going to 0?
Nah, Nvidia's up overnight. Let's go. Let's see. Hold on a second. Hope this is not fake. Oh, it is up overnight. Yay. Let's go, bitches.
From 189 to 192. All right.
Yeah. I bought a whole bunch when it dropped to like 180s. So we'll see what happens.
While we're logging off, Mr. Sorry, go ahead. I didn't mean to cut you off.
No, and Nvidia should do well this year, man. Like, I don't see this thing not getting to at least 250. But we'll see.
Curious, when I was on stream with Mr. Fiorillo earlier, futures on SPY hit over 7,000. Do you think we open tomorrow in the 7,000s?
Probably.
All right.
Probably. What's wrong with that?
Oh, are people still bullish? I thought you said, are you people? I was about to say, what do you mean, you people?
You people? What do you mean, you people?
But
You
yeah,
gotta
so I was
stop
doing-
saying. You gotta stop calling me Mr. Patel. You could call Steve Fiorello, Mr. Fiorello, if you want. Man,
I do.
That's my Mr. Patel is my dad. All right, I don't like that, bro. You're younger than me. It makes me feel older than I should.
I call everybody Mister. It's not a.
Yeah, I know, but we're colleagues. We're friends. Just call me Chris. I don't call you Mr. Farley. I say, hey Matt, what's going on?
You can if you want. You do whatever you want. You can call me Matt. You can call me dumbass.
So
can call
are
me
you
whatever.
gonna sell some Rock Lab or what?
No.
So, why? What's going on? Sir Peter Beck called me yesterday and he said, Chris, you should tell Matt to sell some Rocket Lab. And I said, why, Mr. Beck? And he's like, it's Sir Beck, first of all. And I said, okay, Mr. Beck. Sir Beck, sorry. Yeah, he really wants you to sell some Rocket Lab.
Yeah.
He said, he just feels like you would do really well if you sold some Rocket Lab and bought some UNH. Matt, come on, man. Just sell a little bit. Just like a couple. Come on, like 1%. Okay. Do it for me, man. Just sell 1%. Just 1%. Come on. Take that 1%. You can buy some puts with it. Maybe 2%.
What if I sell covered calls?
Okay, look, if you sell a covered call and you get money and you buy some puts with it, I think that works too. Just buy some puts. For the love of God, buy some goddamn long dated puts, Matt. Everyone in the chat, should Matt buy some puts on Rocket Lab? I bet you the chat's gonna say hell no.
I'd rather lose $1 million and know that I gave it my all than sell.
Bro,
and
this. What are you doing, man? You're killing me. You're killing me slowly, dude.
What is your number one conviction company? Yeah,
I don't have number 100% conviction companies. I'm always managing risk. That's just how things are, man. I don't just buy a stock and be like, yeah, I'm gonna be in it forever if I find that it's, and it's listen, that level of thinking has protected me so many times where I'm not getting in and out of positions all the time, but I'm also adjusting risk because I know that when valuations get super extended, it's time to at least take some off the top and reinvest it in a way. And the thing is, you've already made it, brother. You've made it. You don't need to be, taking the level of risk. But then again, whatever, dude. You're pretty good. Did you? I sold some of my ASTS, not a lot, but
I think you know what I actually think I might buy on Friday?
What?
More Rocket Lab.
I hate you. I hate you. I really hate you. I don't want to be that guy who says I told you so to a friend. But you're making me into that guy, Matt.
I would gladly I'll gladly swallow that if it does come to that, and if
I don't want that though. I don't want it. I really don't, dude. I would rather you be on the private jet with me,
Speaking
of
of private jet,
I
I was doing some I told Steve this, but I didn't tell you this. I was doing some really I was asking Gemini everything about next decade. And I wasn't just blindly, I was QCing everything. And I was going through and I was like, dude, this thing only has 250, 260 million shares. We're not talking about billions of shares. So when you start talking about, okay, the second half of the 2030s, 800 million in distributable cash flow, and then you start to think, well, what about train 6? And train 6 itself is going to add a couple hundred million, and then train 7 is going to add a couple hundred million, train 8's going to add, and you're not even talking about trains 9 and 10. And you start to do some mathematics and you're like, oh, well, what about the prime example, what about the couple $1 billion that they have in corporate level debt, not asset debt, right? We're talking about the company level debt at 13%. What happens when they refinance that? And that's a couple $100 million of interest savings just in that. And you realize you're like, oh shit, just that alone is like 40, 50 cents EPS of potential growth. And you're like, add a multiple to that, add, 5x, 10x, whatever you want on that. And you start to like, shit starts to add up pretty quick if you start to do the math and everything shows up appropriately, right? Of course, if you get diluted to shit, then, it's not going to be bueno. But man, if this thing actually pans out and they don't get screwed on the refinance and everything like that, you could potentially see, if you're buying today at a $4 or $5 cost basis, I'd say on a downside, 20 to 30% of your cost basis is going to be yield on cost in 10 years, 15 years time. So if you have $100,000, you should be getting $20 to $30,000 in dividends. And I think on the upside, it could be on the upside, of course. I mean, this is if everything pans out appropriately, no dilution, refinancing, all the timing goes right, 100%, maybe 120% yield on cost, where you'd actually be seeing this thing.
Yeah, so you buy $1 million, you could get $1 million in cash flow a year. That's what you're basically saying, right?
Yeah.
Even on that's private jet money. That's private jet money.
That's kind of where I'm at, where I'm just like, shit, like I'm getting pretty close to a decent. I don't have that 100K share position like Mr. Patel.
I don't have 100,000 shares of it. I'm trying to get there, but I'm not there.
VG got diluted?
What are you talking about? When did VG get diluted?
I mean, they have a little bit of share-based compensation, but it's not like they're
what are they talking
it's like the 2.4, 2.6, 2.4, 2.5 billion shares, whatever.
I don't know what they're talking about, but all right. I think
Wingstop, where's that at? It's up still.
274.
That's still down a good bit. I have to look at it. I was actually thinking that they've turned their shit around, man. A really good job. I actually wouldn't mind. Yeah, actually.
I haven't gone to a Wingstop in a while.
What franchise can we open up, man? Let's stop being broke.
Bros actually got a nice upgrade, by the way.
Did it?
Yeah, I think who was it? Like damn it, there's a few that upgraded Dutch Bros recently.
Below 60 still, which is good.
Yeah.
I hope it stays below 60.
Yeah.
Curious, you went the other day. Did you get any food or anything while you were there? And then I'll let you go.
I just got drinks. No, actually, we turned back because I looked at the sugar content. Like my wife looked at it, she's like, nah, let's just get like lunch. Because it was a lot of sugar, bro. A lot. So
it is. It's a lot.
Okay. Yeah.
Yeah. I mean, I was getting something every day. I was getting and that's when I switched to sugar-free stuff because I was like, God damn. Like, you start looking and it's like 400, 500 calories. It's like a meal for a lot of that stuff. So normally now when I go, I get like an Americano. So yeah, I try to cut down on how much sugar.
Yep. All right, brother. Well, I'll talk to you later. I'll see you later. See you on Thursday. No, probably Thursday or Friday. Friday.
We could do a Friday show at some point, somehow, somewhere.
Okay. From the hotel. Because
yeah, maybe from the hotel.
You're gonna be in Jersey, right? So we do hotel.
Yeah. Hotel at some point.
Cash Flow Chronicles in person.
Yeah, that'd be cool. Maybe the first time, I think. Yep. Cool. You're the man.
We could have done an episode from no, we did one from Mexico. We did. I don't know if it's Cash Flow Chronicles. I think it was just Tevis Weekly or something.
Tevis Weekly. All right, everybody. We'll see you on Friday.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving. Sell it all today. Or look at it say, it's beautiful. Welcome to the fucking show.